This is Larry Williams, a trader who didn't just make history, he rewrote what people believed was possible in trading. Turning $10,000 into $1.1 million in 12 months? That's not luck. That's 11,300%.
Oh my God! Wow!
Now, being someone who spent years studying market behavior, volatility patterns, and breakout structures, I couldn't ignore this. So, I went into deep research mode. Not surface-level Googling. I mean, digging through old material. And let me tell you, once I tested this myself, it became clear Larry wasn't guessing. He was systematically attacking volatility. Today, I'm going to break that down for you, just like I break down every setup in my trading. Stick with me. Let's get into it. The entire model revolves around a single tool, the Donchian Channels. So go ahead and add it to your chart. Just search Donchian Channels. Now, the indicator itself is good, but not good enough until we shape it the way Larry actually used it. Length, 96. For volatility structure on the 5-minute tone frame. And style, make all lines red for clarity. And remember something important here. These parameters are specifically tuned for the 5-minute chart. That's the time frame Larry used, and after doing my own forward testing, I realized these values capture breakout volatility extremely well. If you switch time frames, you must retest these numbers. I would never trust a strategy without testing it across conditions, and you shouldn't either.
It gives you 3 lines. The middle, mean line. This is not just a random average. It literally acts like a price magnet. When you've traded long enough, you start noticing how price always gravitates back toward the mean. Above it means bullish momentum. Below it equals bearish momentum. Then the upper band and the lower band. These two extremes represent volatility boundaries. Price tends to react here, but when it breaks, especially with momentum, that's where the money is, and that's where Larry did his damage. But here's the issue. If you've traded long enough, you know this. Breakouts inside a consolidation zone are basically traps, waiting to take your stop loss. Because during consolidation, the upper and lower Donchian bands squeeze together. And when that happens, even a small candle can cause a fake breakout. I've personally seen dozens of traders get chopped up here, thinking the breakout is real, when it's not. So we need filters, real filters, filters that save you from garbage trades. The first confirmation is the LWTI, Larry Williams Large Trade Index. Settings I use on the 5-minute, period equals 25, smoothing equals 20. This helps confirm whether real buyers or sellers are stepping in. The second is the volume indicator, simple volume, but I tweak it. MA length equals 30, show volume MA equals on, color equals white. Now I know whether the market actually has strength behind the move. These two filters alone eliminate a scary number of false signals. For long trades, you need 3 things, no exceptions. Price must hit or break the upper Donchian band. LWTI must be green, confirming strength. Volume bars must be above the white MA line and green, confirming momentum. If all 3 line up, you're not taking a guess. You're entering a breakout with actual power behind it. Stop loss, 90% of the time, below the middle Donchian line. If the gap is too large, use the recent swing low. The point is to keep the risk logical, not oversized. Take profit, straightforward, 2-to-1. This strategy thrives on clean breakout extensions. For shorts, it's exactly the opposite. Price breaks lower band, LWTI, red. Volume, red and above the MA line. Enter. Stop above middle line. TP equals 2-to-1. This is mechanical and clean. Here's where most traders mess up. Even with perfect indicator signals, they don't zoom out. I cannot stress this enough. Never take a breakout into a major support or resistance level. I don't care how good the indicators look. If price is smashing into a major level, it will react. I've seen this happen too many times.
So here's what I do, and what you should too. Go to the 1-hour time frame. Mark your major support and resistance zones. Avoid entries into those levels. Simple rule, massive improvement. And here's the cool part. If price actually breaks a major level and then all indicators confirm, that trade becomes extremely high probability because now you have technical breakout plus structural breakout plus momentum. That's real confluence. If you combine Larry's volatility breakout model with solid support and resistance or supply and demand, your win rate and confidence will jump immediately. Check out my previous videos where I explain different scalping strategies. That's the one to watch next. Thanks for watching, and as always, trade safe, trade smart, and I'll see you in the next one.